The History of Forex Trading and the Forex Market Tutorial by Forex Trading, Mr.K. Some of you reading this will find this section a little boring. We appreciate that not everyone will want to know about the history, but we consider it an important part of your Forex journey. It's good to know at least a little about why Forex markets exist and how it all began. So here goes. The foreign exchange market, or Forex, FX, or currency market, as it now often known, refers to a global decentralized market in which currencies are traded. Under this heading are all aspects of buying, selling, and exchanging different currencies at a current or predetermined price. Currencies have been traded across the globe for centuries, but one of the most important events in the history of the Forex market happened in the 1800s. When the gold standard was introduced. Before its introduction it would generally have been gold and silver that were used for international payment. However, this wasn't a particularly good method of payment. The value of these two metals was very much up and down, and were affected by global supply and demand. If a new gold mine was discovered it would drive the price of gold down. The gold standard was introduced so that governments could guarantee the conversion of a currency into a specified amount of gold, and vice versa. A currency that would be backed by gold, and should have stabilized world currencies, sounds a pretty good idea in theory. In real life, however, it didn't quite work out so well and tended to create patterns of boom and bust. The gold standard was dropped, but gold as a precious metal never lost its importance as a form of monetary value. Towards the end of World War II, Allied nations found there was a need for a monetary system to fill the void left by the loss of the gold standard. 700 representatives from the Allied countries gathered together in Bretton Woods, New Hampshire. The reason for the gathering was to iron out the details of a new international monetary system. They decided to call it the Bretton Woods system. The main part of this new system was for the US dollar to replace gold as the standard used for converting world currencies. It also led to the US dollar being the only world currency backed by gold. At that time, it also created three agencies that would oversee economic activity across the globe. These were the IMF, International Monetary Fund, International Bank for Reconstruction, and the General Agreement on Tariffs and Trade, GATT. However, this system suffered a number of problems. These included the U.S. Treasury running low on its gold reserves, and not having enough gold to cover all the U.S. dollars foreign central banks had in their reserves. Bretton Woods came to an end in 1971, when President Richard Nixon closed the gold window and refused to exchange U.S. dollars for gold. While Bretton Woods didn't last, it did leave an important legacy that still affects the market today, and that is the three international agencies that were created and still exist today, albeit in a slightly different form. Nowadays, currencies are allowed to float freely against one another, which has led to the value of various currencies varying, and in turn this led to the need for foreign exchange services. The services were provided by commercial and investment banks on behalf of their clients, but it wasn't until the introduction of Forex trading online that the FX world was opened up to everyone. It has also led to Forex trading being used as a speculative form of investment.